Good afternoon, everyone, and welcome to today's WA METS Digital Mining Export Hub webinar. I'm Michael Beaton, and I'm the lead for the WA METS Digital Mining Export Hub. And I'm pleased to host you today for today's webinar, Tailored Finance for Growth, Understanding Funding Options. This is our first in our Insights for METS webinar series, which will have additional series webinars over the next coming months. Before I begin, I'd like to acknowledge that I'm hosting this webinar from the lands of the Whadjuk people. I also acknowledge the traditional custodians of the lands on which you all work today and the Aboriginal and Torres Strait Islander people attending in this webinar. Today's session will provide your businesses with expert insights on alternative funding options available to METS businesses to accelerate growth. Joining us today, we're pleased to have Aleks Henderson, the WA Director of SME for Export Finance Australia, and Chad Lone, the General Manager for Furnace Solutions. At the end of Aleks and Chad's presentations, we'll take questions from the audience. So please feel free during the webinar to go down to the Q&A button and put in your questions, and Aleks and Chad are happy to answer them. But before we kick off, I'd like a bit of promotion for Austmine and the Hub events coming up. Our second webinar in this series will be coming up on the 6th of April. We'll have David Yates, and some of you people that might have been involved with the export program would have worked with David with Rethink Mining, and he'll talk about the growth of marketing for METS. We've also got an international market development program for Indonesia, where we've got in-country consultants giving guidance and if your strategy is to get involved in Indonesia. So we've probably got about 19 companies involved at the moment, but please feel free to contact us if you're interested. We've got our export growth program again happening in May, and we'll send out some advertising soon on how to register. We'll have some regional events coming through over the next few months. And then Austmine have a couple of webinars coming up, offsetting the costs of R&D and mining on the 22nd of March. And the ESG webinar series, which goes for the entire year, the one coming up on the 23rd of March. So without further ado, I'd like to introduce and welcome Aleks.
Thank you so much, Michael. It's absolutely great to be part of this event and sort of share what we do and demystify a little bit around Export Finance Australia and our role. So just on the next slide, I just wanted to obviously share with you guys who we are and what our team does. So I am the National Head for METS segment for Export Finance Australia. I've been in my role for about 3 years now, and my passion is around providing support to mining services sector and sort of providing alternative funding arrangements. Joining me is also Brad Gosling, who is part of our team and SME support too. Brad's background is within the commodity trading and agri sector too. A very valuable addition to our team recently has been Daniel Smart. He's a Director of Project and Structured Finance space. And these guys are sort of operate within larger project scales, infrastructure projects within WA, mine site operations and setup of facilities overseas. So I will talk about that a little bit more too. So the agenda for today for us is to really demystify who we are, what our role is, businesses that we support and how we do that, and the funding solutions that we provide to you. As part of the update, I will also give you 4 examples of WA businesses that we've recently supported to sort of paint a bit of a picture in terms of why we get involved and how that involvement works for us. So about Export Finance Australia, who are we? So we are Australian Export Credit Agency. We are part of the government, and there's about 50 or so of export credit agencies right across the globe that do have similar focuses to ours. The focus is really to sort of increase that export trade for the countries that they work in. And for us, that's obviously exporting trade and trade within Australia and outside of that. So part of the role and part of our involvement as well over the last 60 years of our existence has been to really focus on supply chain to exporters. So businesses that work to support our exporters that are very crucial on the projects that we work. WA has been extraordinarily busy on a number of different infrastructure projects across iron ore, gold. We've got, Pluto 2 for Woodside kicking off, and there's quite a lot of hype for us and a lot of opportunities to participate in those. one of the things that we are seeing is sort of access to capital becomes a little bit difficult. And as you're growing, your retentions, become quite onerous. Your ability to get additional credit becomes a bit of a stringent as well. And the project risk can be sometimes a little bit too much for some of the banks. So we are referred to as a market gap player. And what that means is that we provide funding to businesses that are slightly outside the credit risk appetite for a bank. That doesn't mean that you don't have a good relationship with your bank. It just means that you sort of tapered your position within equity and security. So if directors are providing directors security, for example, in terms of landed property, houses security, your balance sheet security, over time, as you're rapidly growing, those markers can be sort of hit, and an ability to further provide additional lending can be a bit of a challenge. We also do support clients that do have ATO arrangements, which is sometimes a bit of a risk to the bank. Project risk can also be in concentration, and those risks can be an issue for mainstream lenders, which we can obviously override. And another thing that we really do is within that overseas market gap and our export focus is country risk, or the counterparty risk for our exporters that we sort of can take as opposed to the banks do. So we do work very closely with the banks, with advisors, brokers, your accountants, growth centres and associations such as Austmine and W Export Hub as well. Our passion really here is to be available to you where you are growing, your business is succeeding and winning more contracts. And I can tell you right now, there's more contracts to come with a recent announcement by our Prime Minister here in Perth in WA to really focus on critical minerals aspect. And that's part of the umbrella of where our focuses are. So funding provision from where we sit is for businesses that, have been trading for minimum 2 years. They do have a track record of commercialisation and really are sort of growing or exceeding their bank facilities, potentially due to the lack of Australian security. So who do we provide assistance with? My segment is very much focused on SME and middle market Australian businesses operating in WA. We are a national business that have offices right across different states, with our head office being in Sydney. And primary focus for export credit agencies is obviously supporting exporters of products and services such as manufacturing, defence, food and wine. We do international education, online businesses, tourism and commodities. But a large percentage is what we do within WA, and what my team does is support the businesses within the export supply chain. So mining and construction engineering sector is who we sort of deal with 90% of the time here in WA. Why we want to share the message of what we do is predominantly, a lot of the times we come across businesses that are not aware of our services. The bankers that they deal with are also not aware of it, and they come to us and sort of are quite amazed at the level of support we can provide them. And a lot of the comments are around, we wish you were around for a large project we might have missed out on and couldn't actually take because of the capital intensity and funding we needed and couldn't secure. So we also provide support to any businesses that might be on a call looking at overseas expansions or winning an overseas contract, obviously supply chain to any of those, or any of the, I guess, even fourth removed within the supply chain. You don't directly need to be working for a miner. You can be working for any of the primes or any of the engineering firms to deliver your services. Part of our business and focus is also very much on project and structured finance, which is where Daniel Smart works. So they'll look after sort of those large corporate businesses within, like Austal Ships, for example. We've recently, via that channel, provided Vietnam with some funding to improve their electricity through a wind farm. And we also provided funding, which I'm sure you've seen in the news, around Digicel and Telstra, which is in sort of multi-millions. So we do have a very strong focus on critical minerals and also project infrastructure overseas too, within that Indo-Pacific regions, where we provide a lot of support to our overseas neighbours, but we also provide support to SMEs and corporates that are going onto those overseas projects and are needing plant and equipment to sort of expand their fleet over there, which can be quite problematic for the bank to fund once they sort of leave Australian shores. So on the next slide, in terms of how do we provide that assistance, we do direct funding. We lend directly to our businesses and deal very much on sort of providing credit to you. The main product that we utilize and we're actually seeing at the moment quite a bit of a demand for is the contract bonds. So 90% of what I do at the moment is sort of in that space of providing performance and warranty bonds for our SMEs and middle market businesses. And the main reason for that is that we do have a market leading product which provides those bonds at 20% cash cover. The banks would generally and traditionally want a very strong balance sheet, good track record history, and most of the time 100% cash cover for bonds. Where we sort of do deviate from that is our product is, as I mentioned, 20% of that cash cover. So imagine freeing up 80% of your retentions or current bonds that you have that do take 12 to 24 and sometimes 36 months against warranty to be able to continuously grow your business and reinvest in that growth. Another thing that we're seeing a little bit prominent in this market segment as businesses grow, capital can be a little bit difficult to get. Advance payments for mobility and negotiations with contractors, has been sort of quite prominent, and we can provide advance payment warranty bonds similar to what we do at 20% cash cover, where you would get obviously that payment up front, help assist with your mobilization, help assist with getting your crew paid until you probably get paid within sort of 45, 60, sometimes 90 days. So that cash conversion cycle can be quite impactful to the businesses, and planning for that through a really robust cash flow is quite important. Two other main products that we utilize, obviously loans and lines of credit, very similar to your bank loans and the overdraft facilities that you would have with the bank. They are very much structured according to the project that you're working on or the purchase orders that you might have for multiple contracts around structuring the loan repayments. So they're not just monthly P&I payments or monthly interest-only payments. We actually have that structure and the benefit of mapping out what your cash flow would actually look like and customizing that funding through us. Indirect funding is something that we used to do through EFIC. Everyone, I'm sure, will remember us being referred to as EFIC. We changed our name over 2 years ago to Export Finance Australia, where we would provide a guarantee to your bank in order for the bank to fulfill the facility requirements. So we will provide a guarantee of a certain amount, and the bank will utilize that as security to give you an overdraft or a line or some sort of a trade type facility. So just to talk a little bit more around WA customers that we have supported on the next slide. So we've got 4 examples of clients recently that we've supported right across the products I've just mentioned. The first one I wanted to talk about is Adenco. Adenco, we've provided a level of support to over probably the last 2 to 3 years. They are a water management and civil engineering company. I'm sure you would have heard or seen them on site. They do work with Rio Tinto, BHP, a number of different key miners to provide piping solutions, water management. They do manufacture, their project manage as well. They provide installation and commissioning, and also services, ongoing services for the contracts that they work with. So they were referred to us originally by their banker, and they needed to provide warranty and performance bonds for a new contract. They were growing at a quite rapid rate of knots, and they really needed to get that level of support from their bank, but also needed a boost in their cash flow. So it was a bit of a catch-22. Do we focus on getting a working capital facility, and how do we cater to the bonds and the cash security at 100% needed? So the banker referred the company through to us. We provided them original support for just one contract. However, that's eventuated recently to a bond limit, under which we have a bond limit for their contract bonds that are bank guarantees that we would support and issue on our own paper. We have ability to negotiate certain wording, because not all proponents want the same bond wording, or slight deviation to bank bonds can also be a bit of a challenge for the banks. So this is the role that we play with the Adenco and with their current bank, where the bank would provide them the core debt facility, and we provide them a bond limit for those facilities. On the next slide, we've got JSW Drilling, so Australian drilling manufacturer and service provider here based in Perth. These guys are quite a sophisticated manufacturer, and they really sort of have customized drills and B-bergs that they work on and customize to clients' requirements. So they're a very innovating drilling company. They approached us in that sort of scale up stage of it. They were impacted through COVID. A lot of contracts were sort of delayed and protracted due to access to sites. However, they were able to expand their two current contracts that they had with an exploration company within the forest region here in WA, and also a mineral exploration company too. So their need was to actually expand their fleet with 3 new drill rigs, 2 of which had components imported from overseas, and 1 that was actually being manufactured and customized of a Beberg drill here. Obviously, understanding the company's expansion and understanding what their needs were to fund these, and there was quite a bit of equity they've put in, and our lending facility alongside of that, in addition to along the side of their banks, we were really able to provide them a facility which they're executing on now, and they're almost at the completion stage. So our structured loan facility was very much around the contracts that they've had and support and injecting capital to provide those drill rigs to their clients. The next facility that we have provided, and this is a bit of an interesting one, sort of a bit more of a techie, but still within resources, Australian resources sector. So DXN Limited are a listed company. They were a scale-up company, and when they approached us, they were loss-making. However, they had capital adequacy and ability to raise capital to sustain their cash burn needed in addition to our facilities. So they design and manufacture modular centres, which you can see there. They're quite sophisticated in terms of that provision, and they approached us originally to provide them support on the Mozambique and the Pacific region, a few contracts that they've been able to secure, but also Australian resources sector contracts through Kavala Lithium was one of those here on shore in Australia that we were able to sort of provide them a facility. That facility was in regards to a line of credit, so very similar to your trade quasi-overdraft facility, where we would look at a number of different contracts that you are working on and sort of bunch them up in a facility limit and then fund according to the cash flow for each PO that you get up to a certain amount. So very similar to what you would have an overdraft facility for, but a lot more customized and a lot more specific to your cash flow that you have. So another, I guess, important thing to consider is to really having that right advisory capacity internally, having the right cash flow modelling in place, and having the right availability for that management financial information that you would need to approach a funder. So as we operate very much no different to a commercial lender. So on one of the last slides, we've got Furnace Solutions. Obviously, Chad's here from Furnace Solutions to talk about his business. So I won't talk too much about what business is, because I'm sure he's going to cover that off. But Furnace Solutions have come to us to really assist recently on 3 issuance of 3 bond for their BHP Olympic Dam contract. We originally provided a level of support for their export-related contract that they performed in Chile, and we were able to provide them their original facility. So they had a level of awareness of what we do for export-related businesses, but weren't quite across our ability originally to provide that support to any of Australian resources projects for export-related transactions. So it was really good to provide them a facility that really worked for them in terms of provision for the BHP contract, and provide that solution and sort of allow them to retain cash requirements they would have needed to sort of mobilise and do that contract. So on that note, wanted to thank you very much for your time, and hopefully this demystifies a little bit about where we sit. On this slide, you can see a few examples of additional clients that we've supported. Grounded is one of those, Drill Cube is another, and DCI Electrical is another one. So without further ado, I will pass you on to Chad Loan, who is a General Manager for Furnace Solutions, to talk about Furnace Solutions and their export journey with them and overseas. Thank you.
Thanks, Aleks. Good afternoon, everyone, and thanks to Austmine and Export Finance Australia for the opportunity to speak today in this forum. I'll be discussing as quickly as I can the capabilities of Furnace Solutions, primarily on our people and our equipment, and at the end, an example of our utilisation of Export Finance Australia's funding products. I have 9 slides and 8 minutes, so slide 2, please. So Furnace Solutions is a family-owned Australian company established in 2015, initially to provide refractory demolition services to the minerals and metals industry. Our ambition is to become the global leader in furnace rebuild and maintenance projects, combining the skill sets of our workforce, our specialised equipment, and our culture to deliver projects safely and efficiently. We're headquartered here in Western Australia, and we have operations in South Australia, Tasmania, and Brazil. Next slide, please. Delivering our scopes safely is obviously a key pillar to any business, primarily ours, given we work in a very high risk environment. We've had a number of key learnings across the years, and we continue to developed our processes to ensure our workers' health and safety in this high risk environment, as I mentioned. So we've done a lot of work, as you can see there, in dragging our TRIFR down to a industry acceptable level. And I guess one of the things that we also like to do, and I think is a key in the industry and the communities we work in, we really like to support the regional communities. And as you can see behind me, we like to support regional sporting clubs in the communities that we work in. So on to the next slide, and what do we do? I guess being a small, I like to say small, but we're growing family business. We're very agile, and we work across the full scope of the life of the processing plant and our clients that we work with to provide resources and inputs across all disciplines of the client's needs, from as simple as planning and work pack developments all the way through to I guess the execution and the management of the works. Primarily, we provide all sorts of trade labour, all workers, boilermakers, fitters, coated welders, plumbers, tube fitters, pipe benders, through to the leaders and managers of the scope of work in furnace rebuild and I guess all around metals and mining projects. We're an agile company, as I said, and hence we're open to many different ways of engagement with our clients, which is really dependent, I guess, on the client's desire for engagement. Next slide. We've worked on a number of major projects, and I guess here's just a list, a smattering of some projects. And as you can see, heavily focused on rebuild projects, but also others in the metals processing space around pellet plants, acid plants, both sulfur burning and off-gas related acid plants. And as I mentioned earlier, we're an Australian domiciled company, heavily focused on projects in Australia, but we've also conducted projects overseas, Brazil, South America, New Caledonia, Southeast Asia, and other areas abroad. Next, please. I think one of the things that we're immensely proud of is our culture. We're a people business at heart, and the people inside our organisation drive our culture. And this has been developed and maintained from within. Down the bottom there, doing what we say. That's one of obviously who we are. We do what we say, and our leaders lead by example in a hands-on approach. Our leaders have come through the business and continue to I guess instill that culture within the guys, and it comes from the top. Our managing director Ben Birchall, our I guess our owner of the business, spends long times on site supporting and executing the projects right down to the bottom level with the guys, and I think that is really what drives who we are as an organisation. And on to the next slide. You can see there, I guess, our growth in our workforce and our growth in our people shows that. The photo on the 2018, I'm not sure if it's the left or the right, as you can see it, but in 2018, 80% of that workforce is in the bottom photo in 2021. And those guys and girls have grown with the business. Us fostering their development has fostered our development. And I guess it's self-fulfilling to where we are today. On to the next slide is a pictorial representation of our fleet. We've invested heavily in a fleet of demolition robots. I wish I had more time to go through the gear. It's quite cool. This aids us to develop a safe and reliable execution of work. And I guess that takes us on to the next slide of the actual funding that EFA has provided us. We've worked with EFA in it since our inception. As Alex said, supported us with what I would say a more traditional offshore cash flow requirement term facility, but more recently, and I think is the unique one, is they supported us with an onshore project whereby they provided 3 bonds, advance payment. And I think the challenges for any SME is we're always cash burn is very, very hard and very high, and receivables are always 3 to 4 times longer to get than the cash burn. So having EFA provide us that support. Sorry, I'm talking quick because I'm running out of time. My 3 key takeaways, I guess, for our relationship with EFA and our recent work. 1, the product. Fantastic to be able to access a product onshore to support an exporter client. The process, we had a really short time frame to turn this around, and I guess how quickly EFA got this done really surprised me. And might surprise a lot of other people how fast they move. It was a very collaborative process. The documentation wasn't onerous, which I think is always scary for SMEs. And the people. EFA had a wonderful team. We didn't have to drag them through it. They dragged us through it, which was great. I guess as a service business, that's how you want your service providers to treat you. So I guess without Export Finance's help, I don't want to say we couldn't have done the job, but it made it actually far easier and a lot less challenging than what it would have been to perhaps work with other parties in that space. So. I'm well out of time, so I thank you for your time. And if there's any questions for us as a group, please feel free.
Thanks very much, Chad, and to Alex. Very informative expert insights for you, all the I suppose content after the webinar. Just to Chad, to start with, a clear strategy for export or growth. And getting external advisory. What would your points or advice be around that?
Yeah, I think it's like anything, that without, as a company that makes money out of planning works, you always have to have a solid plan and a solid strategy for everything. That doesn't mean that doesn't change, if things come up. But I think a solid strategy and a solid team that supports you. We have an external finance director that supports us heavily, and that really supported with his knowledge with EFA as well, and utilising that. So can't sort of say much more positives about that.
Thank you. And just a couple of questions from the audience. Sema Kerr, what sort of financial information, Alex, would a business need ready to talk to you and apply for finance?
Yeah, no, thanks for the question, Sema. A very good question too. We're very, very much no different to a commercial lender. So it's just your standard suite of information that you would have. And generally that's financial information. So last 3-year financials, your year-to-date management accounts, obviously ATO history and sort of some information on the business performance. Because we do look at specific contracts, it'd be important to have the idea of what that contract looks like and the scope of that contract, as well as any draft terms that you have with it. And cash flow, I can't emphasize enough how much for SMEs cash flow and that advisory around having a robust cash flow that you'll work with your accountant, that you utilize on an ongoing basis, that will assist us in that sort of forward-looking trajectory and repayment structuring. So that will probably be the key things for me in terms of financial requirements. Provision for us, yeah.
And just to follow along with what Grant's asked on the Q&A, how long does normal application take for completion?
Yeah, Chazo set a pretty good example of us working quickly. We don't necessarily always work super quickly, but it'll be sort of very much in line with the bank. So we do take about 4 to 6 weeks to look at and process a facility from start to go, which I think in the current market is quite effective and quite quick. We do sort of jump on the transactions and sort of commit to a certain turnaround times very quickly, and once we get an idea of what those requirements are, so we can work very, very quickly. Again, having that information and that financial readiness to apply for finance, plays quite a crucial information requirement for us to get through to our credit and get it approved. So, thank you.
Thanks, Alex. And I suppose with this series, trying to stick to a 30-minute time slot, I think we made it. So thank you everyone for attending that first slot. Chad and to Alex, thank you for your expertise, your insights and your time. To everyone who's attended, we appreciate you supporting the series. On the 6th of April, we've got David Yates on growth marketing for METS. We'll send out a registration details on that soon. But thank you very much, everyone, for your time, and we'll talk to you soon.
Thanks, Michael. Thanks, everyone.
Thank you.